Hey everyone, welcome back. Hope you guys are having a great Tuesday. So we got quite a few things to talk about. First, we're going to obviously going to talk about is the markets. The markets were, I think they were down today. Bitcoin was up today actually, along with Ethereum. So that's good news there. Miners were mixed. For the most part, they were down. We'll take a look at what's going on there. And then we also have a couple of stories here. So we have Texas bill limiting benefits for crypto miners. So that's obviously a concern there because we do have a lot of miners that are in Texas right now. So we'll talk about that. We also have possibility. Here's one viewpoint. Banking crisis could spark the first extended duration bull run for the market, says Swan Bitcoin CEO. We'll see what that is all about. And then we also have Argo provides appointment of CFO and March operational update. We'll get into that. Digihost provided their fiscal year 2022 financial numbers. We'll look at that as well, along with Soluna. So we got a lot to go through here. As always, there's going to be the chapters on the bottom, and I'm going to try to get you guys also these clips for the videos so you guys can just take a look at those as well. Okay, but as always, not financial advice. You guys know the drill here. This is for entertainment only. Do your own research, and I'm investing in the following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button, subscribe, helps me out. Let's get into the markets here. So S&P was down today 0.58% to 4,100. Dow Jones was down 0.59% to 33,402. NASDAQ was down 0.37 to 13,100. Bitcoin is currently up about 1.92%, and it's starting to pump up a little bit here in the closing here. Well, it closed actually about an hour ago, so in the new day. We were up a little bit more, so we were up actually 1.32% on the day for today, Tuesday. We're up another 1.83%, and we are battling with our resistance of 28,600. Right now, we'll see if we can close above it. If we can close above it, that might be a good sign, but we'll see. We've tried. I mean, we had a huge wick up here, a couple of wicks up here as well, above 28,600. We weren't able to close above it. If we do close above it, that would be a good sign. We might be going towards 30,000, but right now we got to get above the 28,600, stay there, close there, and then possibly we could go to 30,000. Okay. Right now, RSA is still looking pretty good. It's been kind of going flat, but so has the price on it as well. If you look at the 4-hour chart, it is starting to spike up a little bit here as well. If we look at the RSI at 61 right now, last time it was probably right around here. Bitcoin price at that point was actually right around the same price, by the way it's looking at it up here. And then if we look at the 1-hour chart, let's see what we got going on. We are getting to the overbought territory. We're at 70 right now. And then last time we were at 70, it was quite a while ago. It was back here, and we were still kind of at the same price roughly. If you look at it where the RSI peaked at 73, we're at 70 right now. So we're kind of at the same price right now. So we may have a little bit of a reversal happening here. Yesterday we were seeing the opposite, where Bitcoin price was actually lower at the same RSI level. So that might be a good sign here as well. We might be getting into a little bit of a jump here. Okay, so that's Bitcoin right there. Let's take a look at Ethereum. Ethereum was up today nicely as well. It was up 3.34% to close at 1,171. It's up now 2.26% again to 1,913. So that's good. RSI is still looking pretty good here. You can see that the RSI is at 65. Last time it was down here on Friday the 17th of March. At that point, Bitcoin or Ethereum was actually lower by about, you could say $120 or so. So that is a good sign there that price is higher than the RSI right now. On the 4-hour chart, we can see that we are in the overbought territory at 74. Last time we were back here. At that point, price was lower at that point as well. So that's a good sign. Going to the 1-hour chart, we are at 73. Last time we were kind of close to it here as well. We are still higher on it. So that's a good sign there as well. Okay, that's it for those two topics. Let's take a look at the miners, see how they did today. And it wasn't a good day for the miners. Well, the markets were down pretty much, and a lot of the miners were down as well too. So ANY was down today, ANY was up 1.43% to 35 cents. Argo was down 9.2% to $1.58. I don't know if it's based on the news that came out this morning from them, if that's the reason why it was down or not, but it was down quite a bit here. Digital was flat on the day, $1.54. Bitfarms was pretty much flat as well, 0.57 down to 93 cents. Cypher was down 3.33% to $2.32. CleanSpark was down 1.85% to $2.65. Cores was up 0.32% to 31 cents. Digihost was down 0.66% to $1.51. DMG was flat at 23 cents. Greenidge was down 3.95% to 44 cents. Hive was down 1.79% to $3.30. Hut 8 was down also 0.56% to $1.78. Iris Energy was down 2.35 to $2.91. Marathon was up actually 0.95% to $8.51. Mawson was down 2.65% to $2.94. Riot was also down 1.14% to 956. Soluna was down 5.36% to 26 cents. Stronghold was actually up today 0.75% to 67 cents. And TeraWolf was down 6.84% to 95 cents. Now, TeraWolf has had a couple of days where it's been doing pretty nicely, so that's going to be expected where people are taking a little profit possibly from them. But we'll see how this continues going forward with them. Okay, so those are the miners. Let's take a look at the hour cash rate, see what's going on there really quick as well. We'll get this updated. Hopefully we'll get some new numbers. And we can see that here on the 7-day average, it's down to 331 million. And on the 1-day average, let's take a look at that one. That one is starting to spike back up here to 377 million terahashes. So we are heading up, okay? All right, let's take a look at the stories that we do have here. We'll try to get through these as fast as we can. So Texas bill limiting benefits for crypto miners unanimously passes committee vote. So this is not good potentially for us. I don't think this is going to be a huge downfall of the miners or anything like that, but I think it's just going to be making it a little bit less profitable for them possibly. But we'll get into what the details are. So a proposed new law that could restrict key benefits for Bitcoin miners in Texas passed a state Senate committee on Tuesday and is now headed to the full chamber. Senate Bill 1751 caps how much miners can participate in grid balancing programs, said Satoshi Action Fund co-founder and CEO Dennis Porter, who added that there were no committee votes in opposition. So that's a little concerning there. That puts the legislation on the uncontested list, he continued, meaning it has more than a 95% chance of winning Senate approval. From there, it would head to the Texas House. So hopefully, maybe the Senate gets approval, but in the House, hopefully there's something changes or they at least, cut the deal out completely, but we'll see. However, the tide started to turn for the industry around the summer of 2022 as the Texas grid operators slowed approvals for new facilities due to influx of miners. And we have seen a huge influx of miners. You got Marathon. Well, Marathon doesn't really have their own facilities, but they do use facilities from, I'm drawing a blank right now. There's a couple of facilities that are in Texas that they do use for hosting. But then you got Riot in there. You got Argo was in there until they sold their facility. You got some other ones in there as well, building up shop. So there are a lot of miners in that general area. Continuing on here, Riot Platforms, for instance, earned 21.3 million in such power credits in the first 9 months of 2022. So they do have a understanding between the power generators and the miners that if the power generators need more power for the regular citizens, businesses that are in there, the miners will curtail, and Riot benefit from that tremendously here. Crucially, this new legislation will cap miners' participation in grid ancillary services, such as demand response programs, to only 10% of the total participation. So they can only, shut down 10%, which is kind of crazy. If they can shut down more than they need to or possibly can, why not just have them shut down even more? Why not provide that electricity back to the grid where it's needed by the households, businesses, and other things like that? So I think this is a little short-sighted by the legislators there. The bill will also take away tax abatements for certain property and require miners with more than 10 megawatts of computing power to register as large flexible load operators with the Texas grid operator ERCOT. Okay, tax abatements, you could look at it either way. There are other companies that could go in there. They might get some tax abatements. These guys have gotten tax abatements in the past. Now it looks like they might not be able to get those going forward. I still don't see that being as a big issue there. Yeah, you're going to probably pay up a little bit more while you're operating there, but that's the cost of doing business, unfortunately, and I don't see that big of an issue there. The other thing that they're going to have to do is register as a large flexible loads operators with Texas Grid Operator. I don't think that's a big thing either. You just get registered. What's the big deal? I mean, unless you have some more regulations that entitle this the state to go after you for other things, well, then that could be obviously cumbersome for the operators. But if it's just a registration, register and be done with it, I guess. Okay. So that's it. We'll see how this is going to play out. This is going to be at least a while longer, probably a couple more months to half a year before this goes through the whole process. And we'll keep you guys updated to see what happens with this. Okay. So we got a little FUD here in the Bitcoin mining space, but we also do have some possibly good news. So here's the opposite of it. So banking crisis could spark the first extended duration Bitcoin bull market, says Swan Bitcoin CEO. The next BTC bull market will last longer than previous ones due to the latest banking crisis, according to Swan Bitcoin CEO Corey Clipston. So I thought this was kind of interesting there. So in an interview with Cointelegraph, Clipston pointed out that for more that far more people today know about Bitcoin as a tool to opt out of the traditional financial system than during the previous banking crisis, which engulfed Cyprus in 2013. That means the next Bitcoin bull could potentially last for 2 or 3 years instead of just a few months. Thanks, Clipston. Now, we know Bitcoin, when it gets into a bull run, it usually lasts anywhere between 12, 18, up to maybe possibly 24 months. So it's not always been a couple months. It's always been a prolonged duration, especially before and after the halving event. So if we get into where we're at 18 months, 24 months, I'm all for that. I think that would be great. And it would be a nice way to kind of help out the miners and also our own pocketbooks. So that would be fantastic. So according to Clipson, Bitcoin is not threatened by the current regulatory crackdown in the United States, which he sees as a natural backlash after last year's FTX collapse. I actually tend to agree with this. I think, we had it coming. We had FTX, we had Circle, we had Three Arrows Capital, we had BlockFi, some other ones in there as well. I think Genesis was in there also, one of those. So with everything that happened last year, we were due for a crackdown. And it's usually the government is reactionary, not proactive in things. So that's kind of what we're seeing right now. Okay, continuing on here, the Bitcoin maximalist supports the Securities and Exchange Commission's view on altcoins that they should be regulated as securities. To want to have security regulation for thee, but not for me, which is what altcoin industry wants, I think is hypocritical. Yeah, I mean, that's kind of where things are leaning towards right now. Bitcoin possibly might not be categorized as a security. Everything else might be, because they had pre-mining, they had all this other stuff that might put them under the securities control. Okay, we'll see how that's going to play out. That's going to play out for a while here. Clifton welcomed the latest Commodity Futures Trading Commission's lawsuit against Binance, which he sees as a net positive for Bitcoin. This was actually kind of interesting, the way he was looking at it. So according to Clifton, centralized exchanges like Binance have been slowing down the adoption of Bitcoin by promoting altcoins, which he sees as mainly pump and dump schemes. And I kind of agree with that, actually. If you remember, anytime Coinbase would put out or at least in the last bull run, when Coinbase put out any kind of news that they're including any kind of coin, those coins would just skyrocket, right? That obviously took the fuel away from Bitcoin and possibly Ethereum as well. And it pushed the money into those to, get basically a pump and dump. People would pump them up and then they would dump them, and people that got in at the top were basically SOL, right? So I agree with him on this point as well, that, with possibly some of the legislation coming in that we may have coming up, which is going to take a while still. I don't know when that's going to happen, but hopefully that's all going to get worked out, cleared out, and then, potentially drive some of the money back into Bitcoin as well. So that would be kind of good. And the primary marketing activity of Coinbase and of Binance is to market altcoins. Altcoins in particular, since 2017, have siphoned away demand from Bitcoin, he said. That's kind of what we're talking about here. And I agree with that. You saw people just pouring hundreds and thousands of dollars into these altcoins, hoping that they would go, 1,000x, 100x, whatever it was. They were seeing other coins going from less than a penny to $1, and people were foaming into those things. So we'll see how this is going to play out. But overall, I think this would be good. If we get a longer duration of a bull run, that's good. And then if we get also a lot of people kind of getting sick of altcoins and starting to move back into Bitcoin, I think that would be great as well. All right, let me know what you guys think of this. I thought that was kind of cool. All right, so let's get into now the miners news. First one at bat is Argo Blockchain. PLC announces appointment of CFO and March operational update. Operational update is pretty quick here on this one. They do have a new CFO. Kind of interested to go over this a little bit here, so let's take a look at it. So Argo is pleased to announce the appointment of Jim I'm going to butcher his name, McCallum. As Chief Financial Officer, he will start in the position on April 5th, which is tomorrow. McCallum is not a statutory director of the company. Mr. McCallum is certified public accountant and chartered financial analyst, bringing over 30 years of experience across various roles in finance and accounting. So that's good there. And then Mr. McCallum articled with KPMG and completed the advanced management program at Harvard Business School. So he does have some cred there as well. So we'll see how he's able to help them out in balancing Bitcoin hodl, selling, everything else. We'll see how he's going to help them out with that. They definitely need to grow, and we'll take a look at the reason why here when we look at their update. So March operational update. During the month of March, Argo mined 161 Bitcoins or 5.2 Bitcoins per day. This is a decrease of 10% over the 5.7 Bitcoins that were mined in February 2023. The primary driver of this decrease in BTC production was the increase in network difficulty. In March, the average network difficulty was 11% higher than in February, right? We've talked about this before. If you're not growing, you're generating less Bitcoin. So as of March 31st, the company held 85 Bitcoin or Bitcoin equivalents. The company's total hash rate capacity continues to be 2.5 exahash. They've been stuck there for, I think, like almost 6 months, I think since October. So they haven't been growing at all. And that is all the information that we have here. So let's get into the numbers that I have here, and then we'll get into Digihost and Soluna with their financial results. So if we look at Argo here, Argo currently has 63.4 million shares outstanding. Stock price is $1.58, market cap around 100 million. They have rebounded nicely from their bottom that they were in after possibly going into bankruptcy, fears of possibly going into bankruptcy, but they were able to get themselves out of it, which was good. Right now, we have them at 2.5 exahash future hash rate, 2.5. They're pretty much stuck where they're at right now. We don't have any reports from them as far as getting any new miners. They are 100% operational right now. Average hash rate per miner is about 96 terahashes, which is okay. BTC HODL is 85, which is equivalent to about 2.4 million right now. HODL market cap is 2.39%, and each share has about 4 cents of HODL in there. Okay, moving down here to BTC production. You can see here that they spiked in August at 235. That was their highest that they mined. Ever since then, they've been coming down here, and you can see here on this sheet that they were, since August, they were at 2.5. So 1, 2, 3, 4, 5, 6, 7, 8 months that they've been at 2.5 exahash without any growth. And you can see how their BTC production has continued to come down each month as the network hash rate increases. This is a good example of what happens if you're not growing in this market, right? You're going to see a decrease in the amount that you're producing. And they've basically, with 2.5 exahash, they have decreased by about, 33%, 40% in production over the last 8 months, right? 161, let's see here if we can figure this out, 235 and 161, I think it's like around 40% or something like that. Let's see, 235, 50% would be so around 40% or so that they decreased in production based on that time frame. And then you can also see their BTC per exahash efficiency has been coming down as well, and that is based on the network difficulty, network hash rate increasing. As that happens, you're going to be mining less and less, and you're becoming more and more, less and less efficient in the long run. Okay, so they definitely need to grow like some of these other miners are growing. Okay. Now let's see here. So we covered that. Let's get into what they actually earned. So 160, what did they earn? 161 Bitcoins for March, which generated them about 4 million. So that's good. Bitcoin price coming up has actually helped them out, even though that they mined less than they did in February and in January as well. But the revenues went up because Bitcoin price has gone up, so that has helped them out. So that's kind of the way it works. Even though network hash rate increases, but if Bitcoin price goes up higher than the network hash rate increase, you can still generate pretty good revenue based on what you have. But eventually, it's going to catch up with you, and you are going to be making less and less, especially when we go into the next bear cycle. Okay, so we have that. See, they sold, it looks like, I don't know exactly if they sold 177 this time around. They reported 85 Bitcoins being hodled. That would equate to about 4.4. We know miners, they didn't install any miners right now, and things are where they are. Institutions, for them, have stayed pretty much the same except for shares. Shares did increase a little bit to 48.8 million from 48 million. And percentage owned increased a little bit as well to 10.2% from 10.06%. We still have the same analyst ratings for them: 1 hold, 1 underperform. Pretty high price targets for them: $6.60 to $5 on the low end. And we'll take a look at what I have for them right now. I have them kind of like on the high end as well. 590 is the high end right now. And that's based on the last 3 quarters, which the 2 prior quarters, the ones here, let me see. This one and that one is my estimates. We don't have these reported yet, or at least I haven't seen the numbers for them. If you have, let me know. I'll update my sheets then, but I haven't seen the numbers yet from them. And then we're using, obviously, the current quarter that we're in as an estimate as well. So we got only 1 official quarter with numbers. The other ones are estimates. And we'll just leave it as this for right now until we get some final confirmation from them. Okay, so right now we're looking at about 49, roughly 50 million in the last 4 quarters, 50% at 10 PE because they're not growing. I think that's maybe even a little high for them, but $3.93, and then 75% net income from gross revenue would be at $5.90. Also, they did do curtailing again today. January, February, March, there was 22 days. They were pretty much operational for that amount of time, so they curtailed for about 8.5 days or so during the month for them. Okay, so that's kind of where we have them, 590 through 393. They are currently $1.58, so that would make me think that they are a little bit undervalued. But given that they're not growing, we could possibly take them down to like 5 P, which was $1.97 to 295, and I think that might be more in line with where they should be actually. Okay, based on the information that we do have. If they were growing, we would definitely bump them up to 10, 15, depending on where they are growing. But we don't have the information right now. Okay, so that's it for Argo. Let me know what you guys think of them. If you guys are investing in them, if you're thinking about investing in them, or whatever else. Okay, so that's it for Argo. Let's take a look at the next one here. Next one is Digihost. So they announced 2022 year-end financial results and provide operational updates. So let's go through this really quick. And here are the details. Michael Amar, Chairman and CEO of Digihost, commented, "We are very pleased to report that despite a challenging economy, the company has reported a positive earnings per share for 2022. This is actually pretty exciting because I think they are the only ones so far that I have seen provide positive earnings per share for 2022. Everybody else has been negative. So this might be one of those things where they might stand out a little bit because they are positive. During the past year, we acquired and successfully completed the build-out of our new mining facility in Alabama, worked to optimize existing operations and improve our financial flexibility by significantly reducing debt on our balance sheet, which is good. And then with the company's recently completed acquisition of the 60-megawatt power plant in North Tonawanda, New York, Digihost is well positioned to substantially increase its hashing power in 2023, which would be good as well because they are kind of small right now. But they're kind of like, the way you could look at them is like that. Remember that tortoise, those cartoons where the tortoise and you had the rabbit, right? The tortoise would just slowly do the marathon or the race and somehow finish out first at the end, right? So that's kind of how these guys are kind of performing as well. They're slow to grow, but they are very financially healthy, if you want to put it that way. Okay. Highlights for the year ended December 31st, fiscal year 2022 are as follows. So revenue of $24.19 million, with the company's mining operations producing 60% more Bitcoin than in the prior, so that's good. Net income of $4.33 million or 0.16, so 16 cents per share, which compared to a net loss of $3.13 million or negative 14 cents per share for the year ended December 31st, 2021, which was actually kind of surprising as Bitcoin was really pumping at that time. So they were actually profitable in a bear market, not profitable in a bull market, which is kind of interesting. EBITDA of $13.74 million, an increase of 394% over 2021. Total assets of $52.6 million, cash and cash equivalents of $4.65 million. Property and equipment, miners, equipment, everything else was $41.81 million. Working capital of $2.87 million. Total liabilities of $5.42 million as of the end of the year, decrease of 87% over the previous year, so that was good. And then basic and diluted net income of 16 cents, an increase of 214 compared to December of last year of 2021. And then you got the numbers here. We'll take a look at the numbers that I have for them. I do have some questions for you guys. Maybe you guys can help me out with this. Let's see here. Where's Digihost? Digihost is right here. So when we get into their numbers, financial numbers, I have, I think, one or two questions. Something's not adding up for me at least. Okay, maybe you guys can help me out. So shares outstanding 28.7 million, market cap 43 million, which is pretty good for them, being that they are only at right now 753 petahash, and then future hash rate is going to be about 1.1 currently, but they are going to be growing to possibly over 2 exahash, which would be good. Okay, so here's the numbers that we do have for them. We'll get into my metrics here in a little bit, but assets, let's take a look at this here really quick. So assets have been falling down here throughout the year. They started at 8.1 million. They finished out the year with 1.8 million. Digital currencies, same thing. They had almost 40 million in digital currencies at the beginning of the year. Now we're at 2.8 million, right? It's kind of the trend that we're seeing here with all of these guys. Digital currencies, call options, this was included in the fiscal year 2022. Amounts receivable and prepaid expenses has also come down here to 1.2. Kind of peaked a little bit here in Q2, it looks like, but Q4 has 1.2 million. Income tax receivables, it's pretty much the same here across the board, it looks like, for the last couple months or couple quarters. Total current assets is 6.1 million, so definitely a big decrease here from the 50.2 million that they had. And property and equipment has actually come down a little bit here to 41.8 million from a peak of 50 million in the beginning of the year. Rights of use was 2.5, so that's pretty close to where it's been previously. Promissory note receivables stayed the same. Intangible asset 1.34, pretty close to where it's been before. Goodwill, no goodwill reported. Deferred tax, nothing reported here. And then total assets, it was 52.6 million roughly, almost half of where they were at the beginning of the year at 106 million. Okay. Current liabilities, this is actually pretty good here. So they are accounts payable and accrued liabilities was 2.3 at the end of the quarter compared to 2. Oh, so this one actually went up here. Amount going to Northern Data New York has decreased to 322,000 from 1.3 million. So that's good there. Lease liabilities was 99. That's an increase a little bit over there. Mortgage payable was 488. So a little bit of an increase over Q3. And then what else do we have here? I think that's it. Yep, that we covered here. Pre-funded warrants was 0. Loans payable was 0. So they were total current liabilities at the beginning of the year was 14.8 million. At the end of the year was 13.2. So nice decrease there. So that was great to see. Other liabilities. So deposits payable went up here to 511,000 from 138. Lease liabilities kind of went down a little bit to 447 from 42. Mortgage payable also decreased to 389 from 534. So that's good there. And then warrant liabilities went down to 821,000 from 2.5 million. So that's good there. So total liabilities was 5.4 million compared to 17.7 million. So a 66% reduction basically in that. So that was really good for them. Let's see here. Total stockholder equity came in at 52. So that is lower from the 97 million. And let's take a look at the revenues here really quick. So revenues, and this is where things get a little tricky for me. So revenue for them was 24.1 million for the year. Looks like they came in at 5.682 for the quarter. 5.682. Let's see here if I came close to that 5.682. Can't remember if I updated this or not. I was way off here. Looks like they said 5.682. Not sure what happened there. Let's see here. Paste for my results. They said 5.82. For some reason, I just can't dial in Digihost as far as what their production is. I'm down 38% on them for them. So let's update the numbers here based on what they reported. And then things will kind of improve here a little bit for them as well. But I had them at 3.5. Potentially, let's see where we went wrong here. 56, 64, 99. I mean, that's all the same here. Not sure if they're including something else in there as well that is not being reported, which could be the case. Okay, so the other question that I do have for you guys here is this one. So when I looked back at Q3 results, which there's a link here in my spreadsheets, and this was showing me that these three numbers matched up perfectly. So the Q1, Q2, and Q3 numbers matched up to the Q3 results that they provided for the 9-month running, which was at 5.35 million in power costs. Now at the end of Q4, or for the full year, they reported 14.5 million for cost of power. That, for some reason, if that's the case, they had to spend a heck of a lot of money in the fourth quarter to pay power costs, which doesn't really make much sense. Don't know if they made a mistake. Don't know if I have a mistake someplace. If you guys have any other thoughts on this, or if you know something better than I do, please let me know, because that's driving me a little crazy here. I couldn't figure out exactly what was going on here with this one, because this actually does affect some of my metrics up top. So I want to get this right. Okay. Other production costs as well was 3.2 million for the year, 1 million for the quarter, which is about the same as in Q3. And then they had depreciation and amortization was 3.8 for the quarter, and for the year was 10.7. So that has gone up a little bit here as well. Let's see your minor lease agreements. This is another one that's kind of funky as well. This is based on this. It should be 6.3 million for the 3 quarters, and then they reported 2.5 million. Not sure what's going on there as far as why we are down negative 3.86 million for minor lease agreements. Not sure what's going on there on that one. Okay, let's see here. So gross profit showed up as negative 4.4 million. Cost of revenue was 10.1 million for the quarter, and gross profit margin was negative 78%. And then we got a gross profit minus depreciation was negative 61%, and that's based on because we're getting that power cost of 9 million, which is throwing my numbers off. Okay, so like I said, if you know anything, I'd love to hear it. Office administration as well is down to 784,000, or actually up from 680,000 to 784,000, but still not as bad as it was in Q2. So that's okay. Professional fees was up also from Q3 to 415. And let's see here. Regulatory fees was actually down here, so that's good. Gain on sale of property. So that was reported as 1.4 million. They reported this in Q1 of 2.3 million. So I don't know if they had to write off some stuff here, 1.2 million possibly. in Q4. On that one, loss on settlement of debt was a negative 284, which was in prior quarters. What else do we have here? Foreign exchange gains was down, which was also kind of weird here, but it was down in Q1 as well, so we'll leave it. Loss on sale of digital currencies was 11.5 million for the year. Looks like it was nothing for the fourth quarter. Loss in digital currency option calls was negative 1.9 million. That was a new one that came in. Other income was down 218. They provided negative 50. Not sure why it's coming up as a negative 50, but that's what they reported. Change in fair value of amount owing for minor lease agreement, 1.15 million. I wonder if that's why the number up there is weird. I don't know. If you guys know, like I said, please let me know. Share-based compensation was kind of in line where it's been so far this year. I mean, they're averaging about 800,000 a quarter, which is okay. It's not great, but it's okay for them. And then let's see what else do we have here that kind of stood out. Loss in revaluation of digital currencies was 1.8 million. That was a plus for them for the fourth quarter, which was good. So income loss before income tax was negative 26 million. And then when we look at all the stuff here, net loss was negative 26 million for the quarter, but they were up 4.3 million. And that's based on the help that they had here in Q1, which was really good for them. And then along with Q2, marginally better. Well, that was better because this is only 59,000, but this is 357,000 or 3.5 million. So that kind of helped them out there on that one. Okay. So total for that was net loss of, well, a gain of 4.3 million for them. And that equated to 16 cents. So it looks like they had possibly a 9 cents per share quarter for Q4 based on the numbers that we have here. Okay. Let's get into my metrics here really quick, and then I'll show you how that affects it all. So BTC mined was about 182.86 for the quarter. Starting hash rate was 587. They got to 650. That was an increase of 53 petahash. BTC mined was 309 per petahash. For the quarter, cost to mine 1 BTC with everything thrown in was 52,000. But then when you look at cost to mine 1 BTC minus depreciation, some other stuff, that was just 47,633, where before they were at 12.5, even at 4.7 here in Q2. So this seems really high to me. This seems like it's off, and I'll see if I can figure this out or if you guys know anything. Okay, debt to equity is 0.115, so that's pretty good there. It's really good, actually. Current ratio is also good, 1.88. So that has actually come down a little bit here, but not in a bad spot anyways. So we're good there. Book value is 47 million. I think that they're trading it right now at 43 million. So that's pretty close to it. Price to book ratio is 0.92. Enterprise value is right now at 38.3. And then EBITDA was negative 22 for some reason, where they came out for the year, came in at 13.7. General revenue, this is a revenue 5.6 million for the quarter. General administrative was 1.6, so that came down to 28.28%. So that's a lot better than where it was here in Q3. So that's good there. Okay, the only thing that's bugging me right now is the cost of mine minus depreciation, which should be just cost of mine of the cost of power. That's coming up weird for me, so I'll have to figure that out eventually. If not, we'll just leave it be, and we'll see if we can tackle it some other day. Okay, so that's it. I mean, right now they are looking to me like they are a little bit undervalued based on where they are and then some of the good things that they are doing. So let me know what you guys think of this. I thought it was a pretty good report. The only miner that was positive so far on a per share basis for 2022. We'll see if anybody else can do that, but it doesn't look like it. At least not yet. We may have some of the other smaller miners that might be able to pull this off, but the other guys that have been growing a lot, they're going to have a harder time to being positive. Going into this year, I think that might change though, okay? So that's it for this one. And then let's take a look at Soluna here really quick as well. So Soluna is in the doghouse, as you guys know. They have stopped reporting their monthly production updates as of, I believe it was October was the last one that they provided. So we haven't had one for November, December, January, February, and now March. So the numbers that we're going to look at are basically just their financial numbers. We don't have any data as far as what they're mining now, what their hash rate is or anything like that. They're just not providing it. And we've noticed that anytime a company stops providing their monthly updates, there's usually a sign of trouble within the company as far as financials and things like that. Okay, so here's the data. And this is from Michael Toporek, CEO of Soluna Holdings, stated, "The last 18 months have proven to be challenging for the entire sector. Our team has risen to the occasion and repositioned the company for success and not only have innovative low-cost facilities, but to drive to achieve the scale necessary to have meaningful corporate level adjusted EBITDA once Project Dorothy is scaled. So I think they had to, correct me if I'm wrong on this one, but I believe they had to give back a facility, one of the facilities at least, because of the debt they had on it. Correct me if I'm wrong there, but I think that's one of the cases there. And also so they could concentrate more on Project Dorothy. Toporek further added, these accomplishments have come as we have reduced headcount and operating costs while focusing our resources to achieve maximum return on investment. So that's good there, but they have been struggling here. Here are their highlights here. Project Dorothy, regulatory approval for 100 megawatts energization expected in April. This would be very, very good for them. Effectuated significant cost reductions through headcount reductions, efficiencies, and focus resources. So that's good. Develop project pipeline to help more renewable energy plants benefit from monetizing curtailment energy. Fully ramped Project Sophie by March of last year with an operational capacity of 25 megawatts. Proprietary mining produced 883 equivalent in Bitcoin. And then cryptocurrency mining revenue of 24.4 million for 2022. And data hosting revenue of 4.1 million. Sorry, I'm losing my voice here. I'm going to have to clear my throat. Okay, let's try to continue on here. Let's see if I don't lose my voice. So here's what we have for them. Fiscal year 2020 financial results. Let's take a look at the numbers that I do have for them, and we'll get through it relatively quickly here. So, as always, these, where is it at? There it is. These spreadsheets are available to my Patreon members. As always, you guys have access to those. This one is actually in the old one. This one's going to be in the miners 2022 numbers. And we put some of the old miners in there. Well, not old miners, but some of the miners that don't provide production updates regularly. They're in there, and I'm only using those to provide financial results in there so we can kind of keep track of them. If they ever do start providing monthly updates, we can go back in here, pull the data relatively quickly, and be up and running without spending a lot of time going back through 3 years of data possibly again. So this is the reason why we're doing it. Excuse me. So let's get into it here. So let's see here. There it is. Soluna. Soluna, like I said, last time we got numbers from them was back in October, and it's unfortunate because they were providing a lot of data in those reports that they were providing us, but we don't have any more, so they're in the doghouse. Okay, so we don't know exactly where they are. We can't really say if they're undervalued or overvalued because we just don't know based on the numbers on them. Okay, now as far as their financial results are concerned, let's take a look at their assets. So current assets is cash equivalents of 1.8 million. That has increased, has gotten better from Q3, so that's good there. Accounts receivable is down 320,000 from 2.0 million, which is also kind of in line where they were a little bit here in the quarters prior. Prepaid expenses and other current assets was 1.3 million, so that's down a little bit here from 1.6, but not tremendously. Deposits on equipment was also 1.17, which is still the same that they had here in Q3, but way down from where they were in Q2. So total current assets at the end was 4.6 million compared to 22 million. Big decrease, but we're seeing that across the board with all the miners. And then when we look at other assets, that's 1.1 million. That's about the same. Property plant was down 42 million from 63 million. Then intangible assets was down also a little bit here, 36 million from 38 million. And then total assets was 84.9, down way down from the 136 that they were at the beginning of the year. Okay, here's what we got for liabilities. So accounts payable was 3.5. That's down a little bit here from Q3, which is good, but it's also down from Q1. So that's a good trend to have. Accrued liabilities was up a little bit, 2.7 from 2.4. Line of credit was down also, so they paid some of that off. Notes payable was down also to 11.7 from 13.2, so that's good there. Current portion of debt, that went up to 10.5 million from 6.4, so that's not good. Deferred revenue, about the same where it was, a little bit higher. And operating lease liability was down a little bit, 161,000 from 186. And total current liabilities is 29,500,000. That's down a little bit, just slightly from 32.5 million. So they have paid off a little bit of their debt. Other liabilities was 203,000. So not a big increase there. They got rid of long-term debt, it looks like. Either that or they put it up here. Current portion of debt, I think it looks like they might have put it up here. Or they paid it off here. Operating lease liability was 84, so that's down a little bit. And then deferred tax liability is about the same. So total liabilities was 38.6 million compared to 48 million. So a little bit of improvement there, but not much. Okay, let's see here. Revenues. It looks like the revenues have come down here to 4.1 million in fourth quarter. Third quarter, they were at 6.3, so that's kind of the trend that we've also seen here with the miners. Unless you're growing really fast, you're not going to be able to keep up with the network hash rate increases, and then you end up making less per quarter. Self-mining was 3.7 million, and that was down from 5.3. And then hosting was way down too, also from almost half of what it was in Q3, 470,000 from 985,000. Okay, expenses was 3.1 million for cryptocurrency mining, and then depreciation costs associated with cryptocurrency mining was 7.1 from 6 million. Cost of data hosting revenue was 326. So I mean, they barely made any. Made some. Well, they made some money on it. 470 and 326. Take that away. What did they make? Roughly, it was 150,000 or so. So about 30% or so. And now when selling general administration was way down. So this is actually pretty good here. 1.3 from 5.6. So that's good. Depreciation amortization was up 4.7 from 2.3. And then impairment on fixed assets was down also to 18 from 28 million. So that's good there. And the cost of revenue came in at 35.3 compared to 48. So they did decrease that a little bit here. Well, about a quarter, I would say. So that's good there on that one. Gross profit came in at negative 31 million. Gross profit margin, negative 745,000. Geez, I can't talk. Negative 745%. Gross profit depreciation was 524,000. And gross profit minus depreciation percentage was 14.11. So that has been coming down here for the last couple of quarters as well. Hopefully things will kind of turn around for them in the first quarter, second quarter, and this year as Bitcoin price has gone up a little bit. Other income, 20,000 looks like interest expense, 518,000 compared to 1.6 million. Loss of sale on fixed assets was up to 1.4, and loss on debt extinguishment and revaluation was actually up here, so that was good there. Income loss before income taxes was negative 31 million compared to negative 56 million. So that was pretty good there, but you can see that was going, excuse me, it was going up, but it came down a little bit here. Consolidated net loss was 31.7 million, and net loss attributable to Soluna Holdings was negative 31.793. Loss per share was $1.66 for the quarter and a loss of $7.42 for the full year. So not a good year for them. I was able to figure out for them here in the metrics that they mined 883 Bitcoin as reported. So that got us to about 208 Bitcoin that they mined potentially in Q4. Don't know where their hash rate ended at. Couldn't find that information. So it's kind of hard to figure out what their per exahash was going to be. But we can see that cost to mine one BTC was, this is going to be 169,000 with everything included. If you take out all that stuff, so cost to mine one BTC minus depreciation was 15.2 thousand, so that's a lot better here, but it kind of in line where they've been before. Enterprise value was 9.4 million, and what's their 9.4 market cap? So that kind of sums it up right there. Debt to equity was 0.92, so that's pretty high. Current ratio is down 1.5, so that's not good there either. And then book to value is 46 million. Price to book ratio is 0.204. Revenue for their self-mining was 4.1 million. General administrative compensation was 1.38, so that's about 33%. So that is better than what it was here in Q3, Q2, and Q1, which was just ridiculous as being high on that one. For the year, it came in at 67%. So overall, they are doing some things that are better. They are trying to minimize their expenses, everything else, and hopefully they can get the heck out of this kind of slump that they're in right now. But as far as also their miners are concerned here, if we look at their miners, they have a lot of older miners that were just, these numbers were calculated based on what they provided as far as setting how many miners and the exahash they had. So this was kind of a mixture of different types of miners that they provide information on. The best ones that they had were the 87 terahash miners that they were bought here in, I don't even know when those were bought in. But everything else from that was really, really old. And I would be surprised if any of that stuff is still operational unless they have really, really cheap power, which they might. I think they said that they're like at 2.5, 3 cents of power possibly on average or something like that. So if that was the case, then those might still be profitable. Okay, overall, like I said, they're getting a little bit better there. They're cutting costs, which is good, but they got to get newer machines and they got to get Project Dorothy up and running as fast as possible, which is going to possibly end up saving them in the long run. Okay, so that is it. I know it's kind of long, and my throat is starting to kill me here. Been 2 days in a row where we've had a lot of videos or long videos, so I apologize for that, but as the information does come out, I want to get it to you guys as fast as possible, and this is the easiest way to do it. So this is why we do it, all right? And I hope you guys enjoyed it. If you did, hit the like button, subscribe, helps me out tremendously. As always, like I said, the spreadsheet is available to my Patreon members. Thank you to everyone there for their continued support. We're up to, I think, like 62 members now. So the community there is growing. We'll possibly do something with that as well as we grow more. I'll maybe do some things there as well that will kind of be for the members only. Okay. But that's just right now little ideas in the head. All right. So that's it. Thank you so much for watching. I hope you guys have a great one. I'll see you guys in the next one.